Okay, so the dust may have settled a little bit from tariffs, so I want to go over my gold and copper range breakout automated strategy builders to see what's going off, if I have to re-optimize them, or I can just run them from those previously optimized settings. So first of all, gold. When I look at this moment in time, the strategy performance is still good despite everything that's been going on. For one contract, maximum drawdown is $404, 12 trades in the last 90 days, 91% win rate, really good. It's a very specific type of strategy that doesn't trade every single day. It has to have the right criteria to trade. When I look at the trades themselves, the last trade was actually on the 17th of April, before all of this kerfuffle with good morning, Otis. Nice to see you on the live stream. All this tariff kerfuffle and all that sort of stuff that's been going off, it's only had a couple of small trades since then, the last one on the 17th. So it's not a lot's changed for this because there's protection in there. Can we make it any better? Probably not, because through that danger, we have had a number of trades, but in reality, most of the time, it's kept us out of the trade. So we've got European gold pit open here. We can understand why these trades have not been taken, purely because we've got so much resistance up above and they never really ran. Even coming back down through here, through this range, we've got loads of support. See how it holds that up. You haven't got a crystal ball. Hey, Richard, how you doing? So, not really, we can go back a few more days, but in reality, what we've got is, once we had all of the, I would say, uncertain price action and volatility, we formed new levels, new support and resistance zones, and they're produced automatically by the software. But then that kept us out of most of those trades. There weren't any really great trading opportunities since or during that time, so it's kept us safe. So really, with gold, I really don't think I'm going to make any changes. I'm just going to let it run in sim for a while. So I'm just going to activate that now. Let's just go to the current time where we are now. Okay. So really, what this is looking for now is, it's active. We can have a move up into this zone, but there's no real trades there. So gold, really, I'm not going to change from just bear with me a second, guys. Got to check something out. Okay, so I think gold is it's all right, I think, to run for a while. Yeah, not too bad, just really busy. It's hard to get on these live streams at the moment because I've got a lot going off with development and testing and everything. So I thought I'd do that before. I've got a live event, actually in-person event in Dubai this evening as well. So let's go to copper. Let's get that strategy loaded. So I've switched these off basically during the 2 or 3 weeks, basically because of what's going on with the tariffs. Most of April, I didn't really trade. Bear with me a second. Everybody wants a piece of me when I go live. It's ridiculous. Right, so let's just have a look just to see how it's performed on those previous settings on this back testing. 64% win rate, not brilliant. Max drawdown is huge. Still, net profit was good, but I think this one will need redoing. At the moment, we're just trading the London and oil open, which is good for copper. But I think we need to start again on this. So let's do that. Let's get on the strategies and let's take out the times of the day, days of the week, and we'll start all over again. Just want to check we've got opening trade enabled, straddle disabled, reversal disabled, and continuation trades enabled. All I'm going to leave this is at 20. Okay, so I'm going to leave those stop loss update triggers. So what I'm going to do for now is make sure going to make sure that's disabled. And then we'll just run it and see if we can start this optimization again. We'll probably just concentrate on copper today then, okay? Okay. What we're going to do first is try and find those winning clusters. So let's have a look at the analysis. So yeah, I'm not a rock star. Just everybody wants a piece of me. That is the 9 a.m. to 10:15 is the winning cluster. Okay, so let's just change that on our strategies. So 9 a.m. to 10:15 ish. Let's have a look at that. All right, so all days for now. I will see if there's a bad day. 9 a.m. to 10:15. Oops. 10:15 a.m. Apply. Okay, so let's look at that performance report first. Okay, we've still got quite a low win rate, 64%. The max drawdown's gone down. Remember, it was about 1,200. Net profit is around 6,000. So we've got the right winning clusters. What we need to do now is do visuals on those trades and see what's going off. So let's just scroll along until we find those trades on the profits trade. So losing trade there. Okay. Right, how can we mitigate against this losing trade? One of the things we could do is having it only enter on this oil pit open after that first candle. At the moment, it's probably set to more than one. So, you know, I'm not going to look at the others, but I'm just going to make that one change because this goes out, there's a candle and then another candle and then it fails. I like this opening range to form and then the next one to go. So let's have a look at that particular opening range type of trade. Maximum bars after opening is 5. Okay, so if I have that as 1, it may reduce the amount of trades, but hopefully it will send us the right way. So that trade is gone now. Okay, let's have a look at that performance report. No, it's 71%, yet less trades, but max drawdown's gone to 492, 3,335. So we're taking some of that risk away. We've almost reduced that max drawdown by half because we're only wanting the trades that pop straight away. So let's go and look at those trades to see if we can actually make them any better with how we manage them. Being very risk averse at the moment, I don't want to take any risk. So this was a loser. This was a continuation trade. Okay, so let's measure the range for that trade. 28 ticks. Okay, so if we had a minimum range of 30 ticks, that wouldn't have taken in. How does it affect the rest of there? So let's now go to strategy. So I'm just looking and looking at the behavior and figuring out what's going off, what I can change. So all the way down is continuation trades. Minimum range at the moment is 15. So if I put my minimum range at 30 now, maximum range at 50, let's see what that does, not just to that trade, but to some of the others as well. Okay, so that trade has disappeared, which it should do. So let's have a look at that performance report now. Have we actually shot ourselves in the foot? We have. Okay, the max drawdown's not gone, but we've actually given us a lot less profit. So in this situation, we need to accept that loss. Okay, so I'm going to go back and put that at 15. Not every parameter that you change will make it better. You need to recognize to make one change at a time and then retest. If that change makes it worse, then change it back. Nothing is 100%. Nothing is bulletproof. You are always going to get losses, but you have to mitigate that losses. That wasn't actually a great loss because it was a small range. So let's go and have a look at, whoops, that's just, I think it's because I'm sharing the screen. I'll just re-enable that again. Okay. Profit trace again underneath. Just going to go, tell me when the next trade is. This profit trace under here. Okay, that was a good trade. Can we make it better? Let's have a look to see where the profit was taken. Okay. 59 ticks. How far did we go? 154. So the stop loss adjust needs to be a little less aggressive, I think, for there to maximize profits more. So we need, I'm just going to write this down, 30. Then we need to go through at least, so that was around about 90 or 90. So we need perhaps to go to 100. There's 100. All right. Okay. So let's have a look at these test strategies. This is an open range trade. So we have stop loss update 52. So when it goes through 50, makes it risk free. 90, 70. I'm going to put that at 170. I'm going to put that then at 150. Whoops, 120. Be more aggressive once it goes through 100, obviously. There we go. Much better profit. So one of the things that we're doing is we've found the right times of the day. We're going to accept there's going to be losses, but we need to adjust that stop loss adjust overall. So it's made that one trade better. How does it look at our performance report? Yes, we're into the 4,000s now. We were at 3,300. It's not affected the max drawdown, and we're still at 71% win rate. So I'm quite liking this at the moment. Max drawdown, I don't think we can get any better, but by just adjusting that, we can increase that net profit. We were just a little too aggressive with the move before, and that's what it is. So now that was a fantastic trade there. That just kept going, isn't it? So this was a continuation trade. So it had the range breakout. It came down below, came back in, got the order, and then it went back in. Okay, carried it through the close, which is something that we can change. We can actually get that to flatten on the close, because I know a lot of people use this for funded traders, things like that. So won't make a great deal of difference, but let's just put that safety thing on there. Let's go to strategies. And we will exit on session close. Okay. So no matter what trade we're in, it will exit on session close. I'm not a fan of that. I don't trade funded trader accounts. Okay, I trade real accounts. And if there's a runner running, I tend to want to let it carry over, and that's just my personal view. But there you see it closes at the session close there. How's that affected the performance report? Hopefully it's not too bad. We've lost a tiny bit, but not a lot. Profit factor is 5.69, so very good. Probably more of a safety measure for other people. So we've got a little loss there. What's that range there? 36 is quite a small range, just one of those we have to accept the loss there. Let's have a look at another one. There we go. It's a winner. I don't think there's a lot else we could have done there with that. I think that reached its pivot, the long, you know, the rate, the actual, because this wasn't a confirmation, it goes by a target type and to be honest, that target is worked out over an average. So I think that there's nothing we can do for that type of trade. We have another one here that exited on guardian zones. And I showed those because I showed previous zones there. And this is why we take profit the guardian zone. See how it bounces off there and comes back up into that range. So that parameter is sensible and works very well on this. So where are we? That was a break even. That's fine. It's protection. I think there was any more actually in the last 90 days. No. Okay. Whoop. Yeah, that's good. Let's go back. I just want to make sure there's no bad day. Did those two losers we get, did they happen on a specific day of the week? Can I mitigate that risk? So let's go to analysis again. Entry time. Day of the week. Fridays is very poor, okay? Our main profit is on a Wednesday and a Thursday. It is profitable on a Tuesday. Friday is very, very poor. The drawdowns we get are Tuesday and Wednesday. Tuesday was the highest drawdown. There still was a net profit that day over the two trades that went during this period. Obviously, Wednesday is the sweet spot for those range breakouts for copper. If we didn't trade on a Tuesday, we would reduce that max drawdown, but we'd also reduce that profit as well. So there's not enough data there for me to go back. I'm quite happy with this particular strategy here. So let me just go into the strategies and save this. So I'm going to save the template because within the community, obviously, we can share these templates. So we are HG. Range breakout version 5.3, 10 minutes with one contract. And it's the 1st of May. Wow. 25. Save. Okay, just need to re-enable that now. So what I'll do later on, and I'll share that in the community in our Google Drive for HG range breakout. As you can see here, there's not going to be any trades in this. It's narrow. So we are good, I think, on copper and gold. I'm going to look to look at. Oh, I don't want to do that. I want it just in a new tab. I want to go oil. Futures, CL, strategies. Let's get that range breakout on there. Okay, what I'm going to do is I'm going to load the template up for HG and just take the times of day off purely because I want London open for oil, but I also want the oil pit open as well. That saves me a lot of time on setting things up. So I'm just going to load that template up for now that I've just done. HG range breakout, 1st of May 2025. Let's load that up. So that just saves me quite a bit of time because it's those opens that I want anyway. I'm going to leave all of the settings as they were because they're pretty standard settings, really. I'm just going to disable the times of the day because obviously oil will behave a little different. So yeah, the settings really are for the oils and the London open. That needs to be 3:10 p.m. now because the clocks have changed. Okay. So what the rest of the world, the clocks don't change with the US. There's a 3-week lag, so that's why we changed that. Okay, so let's have a look at this performance report. I want to see if there's any real clusters here of winners. Overall, it's profitable with no real optimization. So let's go on and have a look. Wow. Okay. We are a 3 a.m. So the London Open is really hot for oil range breakout. Okay. So we only need this running for a very short time. So what I'm going to do at this moment in time, again, I haven't used oil this year because a lot of upset with a lot of stuff going off with oil. So, but this looks interesting. Just to trade that London Open with oil looks very interesting. So what I'm going to do is go here, all days, 3 a.m. to 3:30 a.m. That's all I want. Click apply. Just want that very narrow window because that's where the winning clusters are. That's when oil behaves well with this particular strategy. And we can have a look now at that. So we've got some losers in there. So the max drawdown's only 244 bucks, so that's really good with a total net profit of 3,500. But we've got a few losers in there, so I want to see if I can take that risk away. Just want a quick look at that performance, the analysis on times, days of the week. Is there a day? Yeah, Friday is the day for trading oil at that time. Okay, so that was one trade though. I still don't think oil is there yet, you know. So, and that's just one trade. I actually don't think oil is ready for this strategy yet. Because that's one trade, and one trade in 90 days is not good enough for me. So this strategy isn't great. There's a lot more work that needs to be done on this strategy. Oil's been all over the place. This is why I stopped trading it this year. I'm just doing visuals to have a look. Let's just take okay, I'm going to try something a little here. So what I'm going to do, first of all, just going to disable that. Okay. Right, this may be a live stream, but this is me just trying different things, really. I'm actually going to take away the oil pit. Oops. Okay, I've just gone on London here. I want to, because sometimes when we get in overlaps of these strategies, oh God, there we go. Taking the oil pit open off, just trading the London, that's a lot better result. As my dad used to say, I had a feeling in my water. There you go. 3 a.m. That London Open is phenomenal. Let's go to that again. Was it just the one trade again? Am I getting duped into something here? Friday and Tuesday. London Open. 4 trades. That's better. Okay, so I know where I'm going now. Fridays and Tuesdays, 3 a.m. to 3:30 a.m. That's all I'm interested in. So, where are we? Select days. Let's just get rid of that one. So on Tuesday, 3 a.m. to 3:30 a.m. Just that window seems to be pretty good. And again, I can leave this running, and when the opportunity is right, we'll take them. Wednesday, no. Thursday, no. Friday, 3:30 a.m. 3 a.m. Sorry, to 3:30 a.m. Friday to Friday, Tuesday to Tuesday. Okay, we're good. No, the trade windows. It makes sense to me also that the trade window is the London Open, because I used to trade copper and oil together, and the London Open is very reactive to both oil and copper. It's very, very good. So that time window is when the London Open is. So London Open is 3 a.m. EST, but we measure that first 10 minutes of this. So Holy Earth, I look for that. The software measures that first 10 minutes, measures the range, and then trades the range. If it breaks out, we have gone Tuesdays and Fridays, because that's when the winning trades were. Now, this is very selective. So we will only trade when there's fresh air, when there's confirmation. And I'm only interested in the London Open, really, on those days. So what I'm looking for is, I haven't traded oil this year. Okay, so that's 100% win rate is 3 trades, but it's very selective. So if I now run this, I'm not bothered. I'll run it until we get the next trade, gather some more data, run it on sims. It's not an issue. Oil for me this year has not been tradable, and it may be coming back. Just the London Open, Tuesdays and Fridays seems to be the window. Not every day. We do, in this situation here, this is what we call a straddle trade. I haven't got straddle trades enabled, so that what it is a neutral bias, and when it breaks out to the top, it would take that long trade. But that's not in my time zone at the moment. That is a 310. So I could, in fact, put straddles on there to see if it would take that. If I see more, but that's on a different day as well. I really just want to hone in, really, and just find the sweet spot and just let this run and collect some more data. You see here, I wouldn't take that because there was support underneath. It did break eventually, but you have to have some sort of safety parameters in there. Yeah, sensible trade, exit on Guardian Zone. The Guardian Zones are those automated support and resistance zones. And again, look how it bounced off and came back up again. Sensible, that's why it's written in to the code. So another trade there. That was a confirmation exit. So again, this is the trade where you doesn't trade every day. You don't need many trades a month. When they hit and you get, so let's talk about this trade, okay? This will happen again at some stage in the future. We get a move down through support just before the London Open, measures the London Open, and then that move just continues. It breaks out that range and just keeps going down, 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 down. And we get, so we have this blue and green EMA. If we get the green below the blue for a short, when we get the range formed, it's what's called a confirmation management strategy. As long as that green remains below the blue, it will stay in. When it goes back above the blue, it gets out. Okay, very, very simple confirmation exit. If the green is not below the blue, when we get that opening range, it automatically switches to a target type strategy. So, and then again, when you're measuring those average moves, you will look for those targets. For me, the reason why we put confirmation exits in, because if we get a runner, that is a really, really strong trade. So, you know, very, very happy that those things are happening. And range breakouts don't happen every single day. Sometimes we're stuck in a range. So when we look at gold, for example, we can be stuck within a range. Okay, so here, for example, we got the gold pit open. There's a 15-minute up above, comes back down, it goes sideways eventually. You know, it's just not. It's a strategy that works when there's fresh air and when there is a catalyst for it to do so. Other than that, you just got to let it run and optimize. Yes, HG, there's more trades than gold right now. Oil, I'm just getting back into the oil for the first time in 2025. Tuesdays and Fridays for London Open right now. I'm quite happy with that. The oil pit opens not being reactive. A lot of that is to do with news cycle and Trump and all that sort of stuff. So really, I could, you know, by just switching that oil pit open off, it was a lot better results, just concentrating on my knowledge that the London does react pretty well for oil. You see here, this trade wasn't taken purely because we're only, when we look at the bias depth heat map, 2 out of 6. So the bias wasn't there for us. So this is something we could change. Okay. This is something that we could say, okay, let's have more risk for the bias. We're very narrow on those slots for that London Open on a Tuesday and Thursday. Let's see. So at the moment, our performance report is this. Okay. 4-6, no losers, 3 trades. Okay. But we want to get better than that if we can. So let's see what this does, because obviously what changes we make is global, so it will affect other opportunities. So let's go to that strategies, and we're going to change for the opening range. We're going to change it to 2 out of 6. So at the moment, minimum required heat map is 6. Okay, we're going to put 2. Let's see if that registers that trade, and if it does anything else to any other opportunities over the last 90 days. Doesn't take that trade. What is the range? $13 ticks, a very narrow range. So what have we got as a minimum range? Minimum range is 18. That's why I didn't take it. So let's change that minimum range to 10. Okay, just messing around with figures here, because again, I really haven't been tracking oil this year purely because it's not behaved very well. Okay, so there's the trade. Okay, we reduce that minimum and that comes up. So how does it affect the performance report right now? Do we get big drawdowns on other trades? So we do get a couple of losing trades. We do get more trades overall. The max drawdown is only very small, because remember we reduced that minimum range. So obviously some of those little ranges may have just dipped out, took the you know, a little loss, but we are trading more. We have $5,000 profit now. There's 6 trades instead of 3 trades, but 2 of them were small losers. Let's go to the analysis and see when they were. Okay. They weren't massive. One was $34, one was 214. You know, it's not huge. So what I'm going to do right now is I'm going to have to make some more changes. So I'm going to have to take off those days of the week for now, purely because I want to see if we capture any more of those trades with that smaller amount of bias depth heat map. Right now, I've really got a good tight data set that I'm quite happy to run. But let's have a look. Going to go all days between 3 and 3:30. Okay, just want to see if there's a change to the days of the week, because we've introduced the buy step heat map being from 6 to 2, plus also that minimum range. So let's have a look at this performance report here. Okay, 12 trades. Let's have a look at that analysis. Entry time, off hour of the day is good, day of the week, Monday, Tuesday, Friday now. Okay. By changing those, we need to go back and check, as I said, those days of the week. So Wednesday, Thursday, still crap. Tuesday, good. Friday, good. Monday now is an opportunity. So let's go back to the strategies. We'll change it back to specific days, and we'll just add Monday to it. Okay, so select days. We'll add Monday 3 a.m. to 3:30 a.m. It was no good on the previous settings, but we changed something that was pretty global. So we need to go back and check. So now it will trade Mondays, Tuesdays, and Fridays for the London opening range trade. So this is 90 days data as well that we're looking at. There we go, $6,000 profit, nice max drawdown, nice and low at 214, 75% win rate, liking it a lot. Let's go and have a look for that loser. Is there anything we can do to mitigate that? So just looking at that profit trace, the blue line at the bottom of the chart there, it's easy for me to find those winners and losers. That was a break even, nothing we could do there. That was a nice winner target hit there. Remember, sometimes the blue was below the green here, so we went for target. The software automatically flipped to target. That was the loser. Not a great deal we can do there, because we've obviously opened up a bit more with the with everything else. So you've got to accept those losers. Nice winner. Guardian zone exit, just show the previous zones there. You see it just taps the Guardian zone there. That was the confirmation trade management strategy that we discussed earlier. That's good. Oh, that was a confirmation exit right there. But to be honest, that would have been a bigger loser anyway, because you see it came back up. So our confirmation trade management strategy actually saved us a lot there, which is good. Let's go through. Yeah, good trade. Nothing to say about it really. It's just standard trade. There's break even. Wow. Okay, so we could make this better by looking at our stop loss adjusts here. So let's take some measurements. Right. We need to be above this pivot. See how it comes to test. I mean, these opening ranges do act as support, so we need to clear that. So we need to be around about at least 36 before we go for break even. So 30 break even, or 35. Then when we get above 50, we need to be more aggressive and maybe put it at 40. Now, it may affect those other trades, so we've got to be careful with this. If those big runners take out too early, this setting won't be good. But we're going to try it, because if this setting works not just for this particular type of trade setup that's going sideways and trying to go, but it doesn't affect those bigger runners that we've had, then that's a good setting to have. So what I'm going to do is go back to strategies on the opening range trade. So stop loss, we go 52, so that's fine, but we want to be a little bit more aggressive on there. So we want to go 35.2, but then we're going to go 50.40. So we had 52 first. I've got to write this down, and then we had 170. Okay. Obviously, that may be the setting for when we get runners to allow them to run. So I just need to make sure, just changing it for one trade. If it affects globally those other trades, then we'll just revert back. So we can see here that did what it says. Go to 50, come back to 40. That's worked. But have we gone down on the others? Yes, we have 1,743. From 6,500. Okay, so although we're making changes for one trade, the ones that ran, we are too aggressive with that trading stop adjust. And remember, we're after runners. Okay, so in this case, it was break even. That's fine. Okay, so let's change them back before we do anything else. Okay, so, and then I'm going to be finishing for the day, live streaming anyway. I've got meetings, so where are we? I'm going to go back to 52. Opening range. 52, 170. So these are sort of the settings where the runners will run. And that's where we need to be. Just make sure we changed it back and everything is hunky-dory. Yeah, $6,000 profit, 214 max drawdown, 75% win rate. Happy with that. So we started only when we had the London and the oil pit open with one real good trade in 90 days. Now we've increased that to 8 by taking away the oil pit open for a start, concentrating just on that London open, and sort of making sure that we can trade on the right days. So first we started on just Tuesdays and Fridays. Now we're Monday, Tuesday, Friday. And it seems to work extremely well. And so we just let this run now. Just run it in sim. Did I see some trades there? There was those previous trades. That's fine. Okay, so before I do anything, I'm going to save the template. Template, save, CL, RBO. Version 5.3, 10 min with one contract, and it's the 1st of May 25. Okay. One thing with NinjaTrader, guys, remember, I've just added a new chart here and I've changed a lot of settings. I'm just going to go to my workspaces and save it. Okay. Activate that. So we're good. So now in sim, I'm going to be running oil, copper, and gold. Okay, now getting back into it after what seems that the dust has settled from the tariff thing, but I don't think it's over yet. So this is one of the safer type of strategies that looks for specific times of the day to trade, looks at that opening range and trades around that opening range. And I think this is the sort of strategy while there's uncertainty that keeps the risk off. Nothing is bulletproof and foolproof by no means, but this is a sort of strategy that I think I'd be running until these so-called people that have come to the table have made a deal and all that sort of stuff. Until then, I think the news cycle is so volatile for day trading. You've got to be very, very careful. So there we have it. And when I've finished this live stream in the recordings, I'm going to put the link to the automated strategy builders. This is the range breakout one. This is the one that doesn't trade every single day, but win rates are high and profits are pretty good. So if we're running gold, copper, and oil, we're talking, between them $15,000 profit in 90 days for one contract. Obviously, that can be multiplied. It's not a very aggressive strategy, but sometimes you need to be patient and only take trades when all the stars are aligned. So hopefully that helps. Good. I didn't think I even get a chance to live stream this week, but this is the first one I've done. But hopefully that works well for everybody, and I'll speak to you all really soon.